So hopefully some good discussions around the importance of shareholder engagement, not only for management but for the board. And hopefully the answer was it is important, but obviously your own conclusions on that. In terms of questions, here's one that comes from Calgary, and it is, to incent the long term, are you seeing changes in executive management incentive plans, perhaps moving away from stock plans and move to cash bonuses, metrics less tied to stock price, and can you give some examples? Wes, why don't you try that one?
Yeah, so what you're going to see is that stock option plan in the future is going to be a thing of the past. There's a lot of investors who really have an aversion to approving stock option plans, and they're very, very restrictive in terms of the percentage that you can issue and so on. But I'm going to tell you about a plan that I think is something that you should take a look at because, for example, a lot of companies have given this company a hard time in the press, but if you look at the plan that they put in place, which is Barrick, if you look at the plan that they put in place, it's quite an interesting plan. One of the key components of the plan is that they're trying to create a partnership structure for the long-term performance of the business, meaning that the bonuses that they give to management, that bonuses actually reinvested into the company, and they can't take that out until they actually resign and leave the company in the future. So that's a really true long-term plan, and something that I think that will a lot of companies will start to emulate in the future once they understand it. But what it is really, it's culture. It's putting in place a partnership culture, an ownership culture, whereby management, because of the fact that their wealth is now reinvested in the business, and they can't take that wealth out of the business until they leave the business, they're not really thinking for the short term. They're thinking for the long-term viability of the business. So
there's the alignment of interests point. Here's something from Ottawa. What are your views with respect to the board's role in overseeing the resilience of a company? Andre, have a crack at that.
Yeah, so I'd say that it's probably one of the primary role of the board, along with succession planning and strategy. If you don't focus on resilience, you have franchise risk, and then you're going to need a very different skill set around the boardroom to deal with restructuring. It goes with the focusing on the right capital structure, focusing on having the right cushion in the business, understanding your business to know where your vulnerabilities are, and finally making sure that you have the right expectation as to what the business can deliver.
So, Paul, this is coming from the West, so I'm gonna send this over to you. But it's with regards to ISS. Why aren't they regulated? They have a conflict where they ask for fees to improve your company's rating. What do you think of that?
Well, I could mention that in the same mouthful as asset-backed commercial paper and mortgage pools and rating agencies. How come they're not regulated? Where's the accountability for those guys? ISS is kind of a fact of life. They tick a bunch of boxes, and you're either in it or out of it. And I know that the portfolio managers versus one side, and Wes was mentioning this, as opposed to governance is a different part. And many of the institutional investors simply follow ISS. They vote with you or don't. So they have an inordinate influence, rightly or wrongly, the ISS and Glass Lewis's. Should they be regulated? Sure. If you can figure out how to make them more responsive, I agree.
David, here's one interesting, not-for-profit, where the board is elected rather than appointed. Some of the best practices to ensure, how do you ensure you get a top-quality board in that case?
Well, it's an absolutely terrific question. I was vice chairman of Peter Drucker's foundation, which was for innovation in the not-for-profits, because his basic belief was, and I quote, "Society may yet be saved by the not-for-profit sector." Society may yet be saved. Totally opposed to the kind of Chicago school. Having a good board on a not-for-profit, I think, is really essential for performance. And I believe you can take some of the lessons we've learned in the for-profit sector, such as expertise from a skills matrix, a passion for the mission and commitment that's expressed both in dollars and hours you're prepared to spend on the board, And changed, in my view, from the normal 3x3 appointments to the potential to have your directors on the board for a little longer. The average expectancy in the Canadian for-profit sector is 8 years. And most not-for-profit boards are more interested in turnover than they are in longevity. And I think that's a bit of a mistake. So use a skills matrix. Make sure the people who are on your board are prepared to commit the time and the money to fulfill the mission. And thirdly, I take a look at these terms, and I'd maybe ensure that 1 or 2 people stay a lot longer than they normally do.
We're running close to the anointed hour of 1 o'clock. We do have a blog set up, so we didn't answer all the questions today, but we'll come back on that site and give you some further responses to the questions that were asked. We will continue the dialogue on this in the long term. I've already posted a couple things. Larry Finks put out an interesting letter to CEOs and was interviewed talking about the long-term view, which I think is very instructive. There's something out on comp, and we'll be putting some more things out there. So this brings an end to this fiscal year in terms of the Directors Series. One note, this is the last time that I'll be sitting here as the moderator of the Director Series, and on a personal note, it really has been a fantastic opportunity to really dialogue and interact with some of the top directors and executives like my panel today on topics that we think are truly beyond compliance, very important, and hopefully have made a difference in terms of your governance practices and ultimately the performance of your organizations. We talked about the importance of strategy. At Deloitte, we've been revisiting and refreshing our strategy around our directors program. It is a very important community for us. So we're looking at new ways to engage with directors. How do we make more impact? So you're going to be hearing more about that through the summer and the fall. So stay tuned on that front. In the meantime, this is Don Wilkinson signing off for the Director Series. Take care.